Hey everyone, it's Alpha Leak time. So this is a special series that David and I do whenever some alpha leakable crypto news dropped. And boy, do we have a big piece of news today. We want to talk about the implications of Uniswap V3. It has finally revealed its details and announced what it intends to package up in V3, including a launch date. So we're going to talk about that and the implications. David, how big of news is this for DeFi and for crypto?
I mean, everyone has been anticipating this, right? But this has been something that we've all wanted. We all known has been coming. And also, fun fact about Bankless history: the Alpha Leak series started with the Uniswap airdrop in the first place.
That's right.
Coming full circle, and so that's pretty cool. And so we're gonna go ahead and dive into what is Uniswap V3 and what are the big surprising things about it that we didn't perhaps see coming. And there are definitely some very interesting features about Uniswap V3 that I did not expect. The ERC 721 NFTs are involved, which is pretty cool.
Look, it fits. Everyone's getting in on the NFTs, so I guess Uniswap is getting in on the NFTs too, right?
That's exactly right. Yeah, and there's some other things as well, which such as variable liquidity across the AMM curve, which really starts to eat into the moats of other AMMs on Ethereum, specifically Curve. I'm going to call Curve out here. It's like, ooh, does Curve have the moat anymore after Uniswap V3? Question mark.
Yeah.
Ooh.
This is the return of the unicorn. David, I thought this was going to be Ultrasound Money Week, but now suddenly here we are talking about Uniswap. Well played, Hayden Adams.
Hard rug pull.
Yeah, rug pull. Okay, so the other thing is Hayden is coming on the Bankless podcast. Yep. We are pretty much confirmed in DMs. He asked us to dump Mark Cuban for an interview with him, as it was a joke. Of course, we weren't going to dump Mark Cuban, but now Hayden Adams is coming on the Bankless podcast. Hopefully sometime we will be recording that this week. So stay tuned for that, guys. That will be the exhaustive debrief. What you're getting now in this alpha leak is our unfiltered thoughts on this. So we haven't had much time for this to marinate, much time for a conversation around this. You're just getting our unvarnished thoughts. So take that for what it is. We're just reading the announcements and the details here the same as you. We will also provide a version of this to Bankless Premium members in a newsletter segment that we call the Alpha Leak. So premium members get that Alpha Leak. There's a link to become a premium member in the show notes, but you're getting it here live streamed on YouTube, and maybe we'll release this as a podcast episode too. David, we got to start with the tease because Uniswap and Hayden specifically have been teasing V3 for what feels like years. Right. I know that Uniswap hasn't been even around for years, but it feels like that. Here's a tweet from Hayden just earlier. Was it late last week?
It was last week,
March
Friday,
19th.
Thursday or Friday of last week. And Hayden just goes, if I have to go another week without publicly announcing details of Uniswap V3, I might go insane. Which, reading through the lines, it means it's not going to be another week. It was going to be literally 3 to 4 days. And I quote retweeted this one and said, wow, this really reminds me of that tweet where Hayden tweeted out a picture of the V2 Uniswap logo and saying, ooh, pretty colors. And then 2 days later, Uniswap V2 drops. And so reading between the lines, this was definitely clear that this was coming. But then we got another tease just yesterday, actually, which is this very, very dope graphic animation, I guess. It's a really cool piece of art, and it's all Uniswap themed. And so this was their reading between the lines. This is how they were wanting to announce the announcement. So here it is,
David,
audio.
I'm sharing it with sound this time. Can you hear that?
Yeah.
Yeah. So this is the Uniswap announcement, the tease announcement here. I love whoever put together this video, man. I love the aesthetic. Uniswap's done a really good job from a branding perspective and capturing Ethereum's weirdness culture.
We're in her DMs trying to get her to do some stuff.
Yeah, definitely. All right, I'm gonna stop playing that sound here.
So I thought that was pretty cool. All right, and then hold on, I gotta reformat things. And so that was yesterday. And then today, which again, like we were saying, this week was supposed to be Ultrasound Money Week, but turns out it's Uniswap V3 week. So now everyone's talking about Uniswap V3. So let's get into it. What is Uniswap V3. And there's definitely one core standout feature that is standing out from the rest, and that is their concentrated liquidity feature, which is what I was alluding to when I said, does Curve have any moat anymore? And so, and maybe that's good background, good context. Curve is a AMM, much like Uniswap, but it's a modified AMM, where the curve of the AMM, and of course, AMMs, automated market makers, the way that AMMs price things is on a curve, and it's a very simple curve. The Uniswap model is this, what are the letters? Like K times X equals Y or something, 3 variables. It's an exponential curve. We all learned it in like middle school math. And what Curve did, the stablecoin AMM Curve, it changed that algorithm so that there was a flat part, which allowed for much more capital efficiency. And it could do this because it made this assumption that it was trading like-for-like assets. So Curve really specializes in high liquidity like-for-like assets. So USDC to DAI, WBTC to RenBTC. And that was really its big competitive advantage to Uniswap because it allowed for that extra capital efficiency. Yet Uniswap V3 has boasts this new feature called concentrated liquidity, which does the same. At the end of the day, it's not the same design, but it achieves the same result, which is extremely high liquidity in very tight bands along a trading like range. And so in theory, Uniswap V3 can provide comparable or even more levels of liquidity for very specific assets, like stablecoin specifically, that Curve can match. But therefore, what is Curve's moat anymore?
Yeah, the question, I think, or the implication possibly is that this new Uniswap V3 design rather is kind of an automated market maker eater, right? Like it's kind of the automated market maker to end all automated market makers. I'm not necessarily saying that's true, but I think part of the design is that you can provide liquidity essentially anywhere along this curve surgically. And I actually think, and so the implication there is maybe you don't need this diversity of other automated market makers as much, or at least they play less of a role. This kind of generalized case can take it all. I actually didn't really understand this concept, I think, until I looked at this video from one of the Uniswap tweets. And here it is. This is the idea of concentrated liquidity, right? So as a liquidity provider, you can provide basically like you could provide liquidity around a range, like a price range, right? So what that allows you to do, I think of it almost, David, as like a stop loss order, right? Like I can provide liquidity.
Stop loss liquidity. Crazy.
Yeah.
Crazy.
Right. So I can provide liquidity not for the entire curve, but only around a specific range. I think they have an example here of, let's say I wanted to provide, I've got 5 million. I want to provide 5 million, easy 5 million liquidity for the DAI USDC pair, but only inside of this very narrow band, this very narrow range where DAI trades at the DAI USDC pair is 0.995 to like 1.005. So a very narrow band I'm providing liquidity for, and I sort of set the parameters for that liquidity, and I put in all of this liquidity, and the net output, it looks like, is there's massive depth in the pool for this narrow band. That's what you're kind of seeing in this graphic, right? Like look at it go up.
And
so
this is
small
really
band, you get all of that,
right? And this is really, really good for specifically people that want to provide liquidity for that one specific band. And like for stablecoins, stablecoins are never ever, well, they're not supposed to trade at like 10 cents or 20 cents, or really all the way up to like, if a stablecoin is doing a good job, like 95 cents. Stablecoins are supposed to stay in between like 95 cents and $1.05, and ideally as tight as possible, which means that like when you supply ETH DAI or DAI USDC, you're supplying liquidity across the full range of the full spectrum range, when you really shouldn't be. You should only be supplying liquidity within a very tight band, and ideally as tight as possible. And so this is where I think Uniswap boasted that like 4,000x improved capital efficiency. I think that's what they're talking about. That's what they're referring to is like we can cut, people won't be providing USDC DAI liquidity below 95 cents per unit. And they can just concentrate all of that liquidity in such a tiny band. That's really cool. That's really cool.
Yeah, and if you're trading in Uniswap, it means you get a massive amount of liquidity depth for that narrow band, and that narrow band is where the majority of the trading is going to consist of too, which is fascinating.
Right, and what I expect this to do is I expect this to basically have no slippage across stable coins, and I think the fees that people are going to be paying are only going to be gas fees and LP and Uniswap exchange fees. There's not gonna, like for like to like assets, I don't think there will be any slippage on Uniswap.
Yeah, that's the interesting thing as a liquidity provider. If you're providing liquidity for that narrow band, you're still making the same in terms of liquidity provider fees, right? Because you make fees based on every single trade. Right. So that's where that comes in too. But like what you were just saying, David, it comes across in this line. In version 3, LPs, liquidity providers, can approximate any conceivable order book or automated market maker curve by composing multiple positions per pair. That's what they're doing here. Infinite strategies can be efficiently aggregated together into a single pool to form a combined curve that users can trade against.
You know what this tells me, Ryan, is like, so when the concept of an AMM came out and Uniswap really pioneered it, technically it came before it, but Uniswap really made AMMs come into the forefront of the conversation. And people like newbies like me who never really cared for order books were overjoyed because like this is so simple. I just input what I don't want and I output what I do want, and then boom, we're done. And then I kind of like, my knowledge grew and I realized, well, order book exchanges are, really useful like that. Like AMMs aren't killing order book exchanges. They're just supplementing them with something else. I think this kills order book exchanges, and not completely, but it does all the same things. Stop loss liquidity providing. That's what an order book is. That is what an order book is. And so to me, I don't like, as the infrastructure around concentrated liquidity grows and grows and grows, that is going to take away from order book based exchanges because it's doing the same thing.
Yeah, I guess the only downside of automated market makers historically have been that they don't have the liquidity depth, right, of centralized exchanges. And that was particularly true when Uniswap came out in 2018, right? Like there would be some pretty hefty slippage fees before they built up the liquidity. What this is creating is this ultimate incentive for liquidity providers to provide this massive depth of liquidity on these narrow bands of the curve. This is another way they kind of illustrate it. It's like, as a liquidity provider, it used to be in the previous Uniswap version, you could only enter this entire curve, right? You have to provide liquidity for the full curve. But with V3, you can enter in any sort of portion, and you really get to decide whether, like, what band, what area on the curve you want to enter it into, which is going to essentially juice the returns and decrease the risk for liquidity providers. At the end of the day, that's what Uniswap is. It's like a liquidity monster. It's like eating up as much liquidity as it can. And as it gets this liquidity, like liquidity is very much a power law game, and liquidity begets liquidity. It just gets stronger and stronger and stronger. So I see this as a massive upgrade for anyone who wants to provide liquidity to Uniswap.
There's a comment in the Bankless YouTube that it says that wouldn't this mean that there's a lot less liquidity at the extremes of the curve, forcing the prices to become more volatile? So that's definitely something to take into account. Prices inside of a band will be very stable, but if they get outside of the band, they could do something crazy. And I'm kind of reminded of like Wall Street bets type behavior, where like people will like focus in and say like, well, if we can get the price to move out of the band, all of a sudden it'll jump to something like, crazy, just because the liquidity just stops. And all of a sudden like an extra, $100 of buying pressure moves the price by like some X number of percentages. I think there's going to be a lot of games that are played with this mechanism.
Yeah, it's fascinating to try to walk through how this might operate in the real world, and if people will kind of see that liquidity on chain and try to break it in various cases. But it definitely means that at the edges of the curve, the less frequently traded parts of the curve, you're going to get a lot less liquidity, right? It's going to be kind of staggered, Pareto principle, 80-20 rule inside of these more narrow bands. But of course, if people are trading out on the left and way out on the right side of the curve, they're paying a lot more, a lot higher slippage fees as well. So I feel like that's the big surprise. This is kind of a redesign of the entire concept of Uniswap and the entire concept of automated market makers. It's really kind of a revolutionary idea here, but the big pieces are this idea of concentrated liquidity, where you can kind of make bets as a liquidity provider at any point along this band. That's big idea one. And then big idea two sort of falls out of that, which is, as a result, you get massive amounts of liquidity for these bands, and you get massive capital efficiency gains here. So this talks about the capital efficiency gains max out at 4,000x for LPs adding liquidity in a really tight band, like 0.10%. And that's why I think I think it makes sense for you to talk about Curve, because that is an entire, I guess, protocol, DeFi protocol that maximizes stable, like
right.
the curve that's most appropriate for stable coins, right? Mm-hmm. And now Uniswap can essentially replicate that, or it seems like it can.
Yeah, and that's exactly right. And like I said, I don't understand this. This does that same thing of having a curve that's not just an exponential curve, but is shaped as exactly what the market needs it to be shaped as, just to provide, like, maybe for whatever reason you have an asset, and that asset is typically either $100 or $200, but for some weird reason it's never $150. And I don't know why an asset would do this, but people can get creative in DeFi, and so liquidity providers can just stay providing liquidity around $200 or around $100 and nothing in between. And like a lot of games can be played like that. A lot of interesting assets can be expressed like that. And so what that's like Curve if it had two flat spots on the curve, or
right.
n number of liquidity points along the curve. And so it's really changing that x times k equals y, I think, is the right equation. Yeah. Really what that's doing is that's manipulating that curve of liquidity to exactly what the market needs. And the liquidity providers will figure out what that optimum shape is, because they are profit maximized, and that's what their incentive is.
Yeah, the market gets to decide now the right spot on the curve, which is super cool, because Uniswap V1 with automated market makers, it really brought the market's ability to decide the liquidity depth of any particular asset, right? So completely permissionless, any asset can be listed, anybody can publish their asset on Uniswap, and the market decides what the liquidity profile of these assets are, essentially, right? And so the best assets kind of rise to the top. They get the most liquidity. The best monies get the most liquidity. This does that same thing, except for like the best curves win, right, essentially, or the best curves that fit a particular pair of assets. Super cool. But you know what? This is at the same time, this is probably the meat of the story, right? And the meat of the innovation. But there's also more here. By the way, there's an entire white paper that David and I have not gone through with all of the details behind this, including kind of all of the math. We'll include a link in the show notes to that too. So
if you dare enter a white paper.
We're just trying to summarize this for you at the high level. But let's go through a few other things. This is actually from our alpha alert that we're going to issue to Bankless Premium subscribers, but we'll go over a few of the TLDRs. The first two we sort of talked about, David. So what is included in this Uniswap thing? Concentrated liquidity and capital efficiency. Those are the major innovation points. But the third, I think, is almost as exciting for all of DeFi, which is Uniswap is going to be deploying this on Optimism. Optimism, of course, is a layer 2. That means it's Ethereum secured rollup. right? So they're not just going to put this on mainnet. The date, by the way, Uniswap is targeting a V3 launch on May 5th with an Optimism deployment, they say shortly thereafter, which to me, they don't have a date. But shortly thereafter, is that weeks?
Well, they can't announce for Optimism, so they have to wait for Optimism. Yeah.
There's some dependencies there. But how big of a deal is this, and what are the implications of Uniswap deploying to a rollup like Optimism?
Right. So there's a lot of content producers like Bankless or Anthony Cesano's Daily Quay or Into the Ether or anyone talking about Optimism and L2s are coming and they're going to blow everyone's minds, and people are like, oh, okay, cool. I wonder what that means. What that means is that Uniswap feels like Coinbase or Robinhood, or it's centralized exchange level of performance and user experience with a decentralized level of security. And so we retain the values of decentralization, which there's infinitely long hours of conversations as to why the values of decentralization are important. But
by the way, practically that means you can exit without anyone's permission.
Yes,
right?
Yes. You always have custody of your funds. You can always leave and do whatever you want with your funds. No one can ever do anything with your funds that you don't want them to. Self-sovereignty, permissionlessness, going bankless, blah 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 blah. What Optimism is doing and what Uniswap is doing is all of those fees that people are bummed about paying because it costs like $30 to make a trade on Uniswap goes from $30 to maybe 3 cents. Or pennies. It goes to pennies. And also the order goes through instantly, as it does when you trade on Coinbase or through Binance. And so so getting your money into the Optimistic L2 will take one transaction, and that will cost your typical Ethereum transaction maybe 30, depending on how fast you want it to be, maybe $20 to $40. And then once you're on Optimism, it's just like you sent your money to Coinbase or you're sending your money to Binance, and then you can trade infinitely 1,000 times a second, do whatever you want, because that's what the power of Optimism is. And so all of these cool features that we're talking about on the Uniswap main chain is just going to be replicated on Uniswap on Optimism.
Yeah, so exactly right. A couple thoughts there. So, the one is it's awesome that rollups are here, right? They're here enough for Uniswap to be able to deploy on them. It's interesting the strategy that Uniswap is taking, because it's kind of like a, one foot on the shore and then another in the sea, right? So it's like they're deploying on mainnet, they're going to live on mainnet, but they're also going to live on this Optimism rollup. So it's not one or the other, it's like both. But this is a contrast from the way some other DeFi protocols have chosen to deploy. So we talked in one of our weekly rollups, David, about like SushiSwap's deployment strategy. And it was like shotgun approach. Where are you going to deploy? We're going to deploy everywhere. We're going to deploy to Matic, or we're going to deploy to Polygon, XDAI, Binance Smart Chain, like Polkadot,
anywhere that we will be halved.
Yeah. No, we're not making any concentrated bets here. We're just like going to go everywhere, and we'll see where, what the market decides. Uniswap is taking a very, I would say, ETH first, maybe even you might argue decentralization first strategy. And they are leading the way, and they're saying like, we're picking optimistic rollups secured by Ethereum. And like, that's their strategy. This is not a shotgun at all. It's also interesting that they've picked Optimism because and rollups specifically, because this is we've talked about this in the past, David, but like layer 2 is very much a coordination game for DeFi protocols, right? So Uniswap in an optimistic rollup isn't going to be very interesting unless there's a lot of ERC20 tokens inside of that rollup and a lot of liquidity inside of that rollup. And honestly, a lot of other DeFi protocols joining the party, right? So Uniswap is saying, hey, Manhattan's busy, so we're going to build out in the suburbs. We're going to build out in Brooklyn a little bit. But this is a signal to say, like, join the party. Unless other DeFi protocols join them on the optimistic rollup, then it's going to be a lonely place. So Uniswap I feel like the market was almost waiting for Uniswap to make the move. And why Uniswap? Well, they're 57% or 53% of all DeFi trading volume, right? One of the highest market cap DeFi token, kind of a leader in many respects, a flag bearer in many respects. And I feel like the market's waiting for Uniswap to make its move before it decides which roll up to support. And maybe this is the push that everyone else needs to get to an optimistic roll up and join the party.
Well, we also need Optimism to actually launch so that the party can actually start. That is an important variable as well. Optimism has just increasingly become the shelling point. So I do think, and it hasn't even launched, and maybe it's too early to say, but I kind of think it's already determined. It's going to be basically Optimism and maybe the Starkware ZK rollups. And so I don't really have any concerns that these DeFi protocols won't be able to coordinate just over time. I think it's all just the party's going to start on Optimism. Also, people that we are in the DMs of trying to get on the Bankless podcast. And so then hopefully that follows right after the Uniswap podcast with Hayden. Where do you want to go to next, Ryan?
Let's keep going. So those are, I think, the three big pieces, right? Concentrated liquidity, capital efficiency that brings, and then they're deploying on layer 2 on Optimism. But let's talk about this flexible fees. So Uniswap V3 has different fee tiers per pool. So, and it really depends on the volatility per pool. So that spans from 0.05% to 0.3% and 1% depending on the volatility. In version 1, you didn't have that option. Essentially, right. You have like a standard, less flexible fee. So that is a difference. Again, providing some more customizability and some more, I guess, optionality and determining the market preference from liquidity providers. So flexible fees is another feature here.
Interesting, like that they already picked out 3 and then locked you into only 3 rather than just, why is this not a number that you can input? That's what Balancer lets you do. Yeah. Specifically Curve, the highly liquid AMM for stablecoins and other like assets, they have that 0.5% swap fee. So it makes sense that we can now choose more optimum fees for our trading pairs. But why not just make this a parameter? I don't know. Something we'll have to ask Hayden.
Yeah, I think that's a great question. And let's continue moving on. I think this is important. Uniswap protocol fee. So in V1,
money for Uni token holders, money.
Okay,
revenue.
Right. So Uniswap introduced a 0.05% governance cut in V2, like the parameter, but it was never turned on. A V3 introduces governance fees on a per pool basis. So that's one distinction, not just doing it for the entire Uniswap platform. Every pool will have a different protocol fee that could be between 10% and 25% of LP fees. So all fees will be turned off by default. They're not turning them on, but governance, Uni governance, will be able to vote on these fees to turn them on or not. So this is something we've talked about since May, since before DeFi summer of last year, the idea that governance tokens will vote to bring cash flows into their token economics. This is another step down that path. Everyone's asking like Uni's valuation, what's that based on if it's just a governance protocol? Well, it's not just it's a governance protocol that's going to add cash flows.
It's going to pay you money. That's why it's valuable.
On the wall. Like that's what's happening. It's turning into a capital asset. And anyone who holds Uni tokens is incented to vote on these capital assets. I'm wondering if we did some basic look. Our analyst, nice job, Lucas Campbell, shout out, man. He did some basic napkin math on
never before seen napkin math, specifically to Bankless viewers.
Here's the basic napkin math. So he's doing Uniswap protocol earnings. And I suppose this is based on a 10% rate, right. And then red is a 16, so halfway between 10% and 25%, and you could see sort of the protocol earnings. I guess this is
probably yearly
over time here.
400
million annualized.
Yeah. Okay. So between 200 and 400 million dollars on a yearly basis into the protocol. Not bad. Not bad.
Into the protocol, into the capital asset,
into your pockets if you are a Uni token holder.
Well, the crazy thing about this, and people still haven't wrapped their heads around the difference between Coinbase and Uni. But like Coinbase has a lot of overhead that Uni just doesn't have.
No, Uni exports this overhead to Ethereum.
15 employees in code.
Right. Yeah.
Right. Well, like that's it. it gets everything out of the box with Ethereum, whereas Coinbase has it's more like a bank. It has thousands of employees, lots of overhead. So anyway, very cool here. Should we talk about the next one?
Yeah, this is the very interesting one. This is gonna throw the world of composability in for a tizzy. And so what Uniswap has done, when you typically provide liquidity to Uniswap, you like for the ETH DAI pair, for example, you put in equal parts ETH and DAI, and then you get this LP token, which is another ERC20 token. And that paradigm that you put in your deposits and you get a receipt that's also an ERC20 token, that alone triggered a massive conversation about the power of composability. Dan Elitzer wrote his famous piece, Superfluid Collateral in DeFi, because you can take that LP token and lock that up as collateral in things like MakerDAO. And MakerDAO has recently done this. There are ERC20 LP tokens as collateral in MakerDAO, which allows you to draw debt against it. What Uniswap V3 has done is, because of that that more surgical inserting of liquidity across a specific band, in order to enable that feature, they needed to turn their LP tokens into NFTs. Because if you are providing liquidity for ETH DAI between $1,800 and $2,200 Ether, that is not the same parameters as somebody else who is providing liquidity between $1,000 and $10,000 Ether. Those are different parameters. And so those parameters, I'm pretty sure this is the way this works. Those parameters gets baked into the NFT, and those unique constructs are part of that NFT. And so what that means is that not all ETH DAI liquidity positions are the same, and all of these LP tokens, which are now NFTs, are not one-to-one tradable in the same way that they previously were, which means accepting these things as collateral into other DeFi protocols will take more overhead and take more custom engineering to really get that done. And so it's really going to be interesting to see all these DeFi protocols have to wrestle with this.
For sure. What you just said is that customization, there's actually a trade-off here, right? Because with that customization that the LP gets to enter at any point on the curve, what we lose is fungibility, the ability to exchange all of these liquidity pair positions one for another. Now, my question is, like, what are the downstream implications of this, right? The first is NFTs there's going to be a whole lot more NFTs on Ethereum. That's for sure. Imagine every single liquidity provider that deposits anything into Uniswap getting an NFT, right? And so what's going to happen to all these NFTs? Are there going to be ways to trade them individually? Where does something like Immutable X, which is creating kind of a layer 2 for NFTs, where does that come in? Will there be ways to tranche these NFTs together and convert them back into more fungible ERC20s? I'm betting the answer to all of these things is yes, and that's probably maybe the gamble with work. Yeah. But maybe that's the gamble that Uniswap, or the trade-off that Uniswap is making for this, because I see this is the aspect I don't love about the new design. I'm just wondering what the implications will be for it.
Right. Yeah. And to be honest, we never really saw the composability of LP tokens really take off. We only really got a hint of it with Uniswap V2. And by the way, Uniswap V2 will still be a thing. And so if the market really wants those LP tokens to be ERC20 tokens, they can still have that, because Uniswap V2 will never go away. Uniswap V1 is still here. People still trade on Uniswap V1 for whatever reason. NFTX has done a fantastic job of producing liquidity across NFTs. So CryptoPunks have liquidity. So you could simply just put in 1 Ether, and then you can get this token that represents CryptoPunk liquidity at aggregate. And CryptoPunks are, unique. There are I don't know how many, 40,000 unique CryptoPunks. And so perhaps there's a roundabout way to solve this in the back end, where we go with ERC20 tokens into Uniswap, mints an NFT version of an LP, and then all of these different NFT LP tokens are then recoalesced back into a platform like NFTX to produce out another ERC20 token. It sounds complicated. It sounds like a lot of work. But people in DeFi do stuff like that. People tinker, and so maybe this solution is solvable.
And I have a sense that some of that experimentation might happen on the optimistic rollup, where gas prices are really low, right? Some of that innovation can live there. Let's keep going. So there are a lot of advantages to Uniswap. The the money Lego or the system, but there's also like system-wide Ethereum and system-wide DeFi advantages that we're getting out of this. And one is more advanced oracles, right? So Uniswap has famously been kind of like providing an oracle service to the rest of DeFi. And it's a very censorship resistant oracle service because it's based on some code, Uniswap code that cannot be stopped itself. So it has some advantages that, you know, Chainlink and off-chain sort of oracle services that are feeding data internally do not have. So what we want out of this whole DeFi system is the most censorship resistant, unstoppable set of oracles possible, right? Because oracles price feeds provide everything we need. They provide, you know, data for synthetics. They provide like an underlying primitive that the rest of DeFi can use. And it looks like, I haven't gone into all of the details here, but the Uniswap V3 upgrade is going to provide a big boost to its oracle service, making it possible to calculate any recent time-weighted value within the past 9 days. I'm actually previously, it sounds like it's been like less than 9 days. So this gives a longer history to, you know, provide a price feed oracle based on.
Yeah, and I think there's just overall just more robustness about the infrastructure of the Uniswap Oracle, just making it more consumable by other DeFi apps. And I think that's really the key innovation is like, it's a developer usability feature. And we need internal oracles to come out of Ethereum. And oracles are really, really important if we want to maintain our self-sovereignty, right? Because so many of these DeFi applications need price feeds to operate. MakerDAO needs it, AAVE, Compound, anything with collateral needs a price feed. And so it's really DeFi or Ethereum is trying to ask the question, what are these assets worth? And they don't really know the answer to that question without an oracle. And historically, Ethereum or DeFi at large has had to ask that question externally, as in like, hey, Coinbase, or hey, Binance, or hey, Chainlink, what is this worth? And now instead things can ask Uniswap, what is this worth? And like you said, that was a feature of Uniswap v2. This is not brand new in Uniswap v3, but it seems to be that the infrastructure around this oracle is just better. And so what that tells me is that this is making DeFi more buildable because we have censorship resistant oracles out of Uniswap. And especially as Uniswap is growing to the amounts of volumes that it is competing with Coinbase, that makes actually the oracle more resistant to attack, right? Because somebody might be able to just like drain the order book on Coinbase, and then all of a sudden the Coinbase oracle reports a very weird number, and that triggers a bunch of events in DeFi. Black swan risk. The more volume we can put through Uniswap, and the more censorship resistant these oracles can become.
Makes the oracle stronger. Liquidity is key here. So it's all this great feedback loop. Let's talk about this too. So gas efficiency. So everything with the above upgrades we talked about, V3 swaps are actually cheaper than V2. Now, I don't think this means significantly cheaper, but the fact that they are cheaper at all
is pretty cool.
Seems to me to be an amazing accomplishment, a pretty cool accomplishment. It also tells me that's like, it's a competitive advantage to be on mainnet and to offer trading at the lowest possible gas fee. That just in itself, if you're going to operate in Manhattan, right, like that in itself is a competitive advantage. And I think that something that other automated market makers are going to have to compete with Uniswap on if they want to garner liquidity. So that's pretty cool. Like Uniswap already did a pretty good job of this. It's like always been one of the cheapest places to, you know, trade from a gas perspective. And it seems like they're just continuing that.
Yeah, this is definitely a point of diminishing returns, I would say. I don't know. I'm not an expert on gas, but I'm going to go ahead and guess that this increased efficiency by somewhere between 5 to 15%, somewhere in that range. It's not cutting it down by 90%. Like, it's not an L2. It's just optimizations. And the Uniswap V2 was already pretty well optimized. So the fact that they are even able to boast even further optimizations is pretty cool. But like, this is not a new paradigm in gas. It's still going to be roughly as expensive as what people have been used to. But just like Ryan said, like, being able to be competitive with making the same trades but with less gas versus competitors is important to as infrastructure.
Now here's one. So this is part of the TLDR is the license.
Yeah.
Interesting. So
this is meat space stuff. This is not DeFi protocol stuff.
Yeah, so there's a piece hidden in the original post that talked about the licensing, and here's kind of how I understand this. As we write this, there's some kind of debate on Twitter going back and forth as to what this means, but it looks like V3 will be released under a different license, meat space license, versus V2, a business source license, which limits the use of V3 source code in a commercial or production setting for 2 years. After 2 years' time, it returns to a similar open source license that V2 was under. But it's kind of like this time delayed GPL license. So to me, like when I ask the why did they do this? It seems like very obviously a response, some meat space anti-forking provision, right? So what they're saying to anybody who would try to fork it is, hey, if you do this, this is actually against the license, right? So you could see all of the code, but you're breaking a license. If SushiSwap, say, tries to clone this or fork this. I have kind of mixed feelings about this, David, to be honest. So I want to get your take on it first. Why do you think they're doing this, and what are the implications?
Yeah, this is probably a direct response to the whole SushiSwap vampire attack thing, where SushiSwap literally just forked Uniswap code and then did the LP rewards. And so they say, hey, we're going to clone Uniswap, and then we're going to distribute this new token to people that use our version of Uniswap. And if this license was up, that would make this a little bit more restrictive, right? The take here is that, like, Ethereum is inherently open source, and the only way that you can stop someone from copying your code is through meat space regulations, like the courts, laws, nation state laws. And so it's a little bit antithetical when we're talking about this grand like arena of open source development to say, like, no, if you copy our code, which is, you know, public, is when you publish it to Ethereum, it becomes public knowledge. It's in the public domain. Now you can file a license, which is what Uniswap has done, saying like, well, if anyone does this, we can legally go after them according to the rules of the nation state. I'm pretty sure licenses are maybe USA only, or maybe there's an agreement between the USA and European Union, but it's a little bit antithetical to the space. However, it ends in 2 years, which is not that long of a time, and also, you know, it's a compromise. Like, we can't be completely cypherpunk crypto maximalists. We do live in physical reality. There are trade-offs that we have to make. Uniswap does deserve innovators rewards, and so do all the investors. And maybe I'd be interested to see how much influence Paradigm had with this influence, if that was really what they pushed for, or if this is something that Hayden really wanted. Something we'll perhaps ask him on the podcast.
Yeah, so it's something that for sure could be forked to anonymously, right? But
doesn't stop anonymous forking.
It doesn't stop anonymous forking, but it probably does stop things like there wouldn't be a high reputation, say Silicon Valley style DeFi protocol with major investors who would just take Uniswap and fork it. Would do that. So yeah, I guess the lens through which I see this too is this is a response to what Uniswap has clearly perceived as a competitive threat. So this is a protocol using meat space now to defend against and to build a moat against competitors. So
not the first time either.
Yes, and not the first time. I'm also not surprised. I guess we'll see how this plays out. I do agree. It's not in the spirit of like fork it and see, right? Everything is open source. So this is a little departure from that. So we'll see how this plays out here. Well, I think we've gotten through all the TLDR stuff, David.
I think there's one feature that we haven't covered yet, or maybe I misinterpreted something. I think it'll be in the blog post, but it's about like if you want to provide liquidity to the ETH DAI pair or any pair, but you only have one of the assets, I think Uniswap will take care of that for you. And so you can deposit just Ether, and then in the background, it'll give you a liquidity position into the ETH DAI pair or the ETH USDC pair. And so you only need to come to Uniswap with one asset to provide liquidity, and you will be buying it in the back end. But instead of having to like come to Uniswap with both equal amounts of tokens in US dollar value terms, you can just come to one, and then Uniswap will take care of it in the background. Just a UX upgrade as well, which is kind of nice.
Yeah, absolutely. So again, this is not live yet, but we're dropping it as an alpha leak because it is such a monumental, I think, achievement for DeFi and for Ethereum. So it's important that you know about it. I guess what are the the action items here, David? We haven't even talked about Uni token price here, but I imagine it's doing something in the background at even as we speak. I think the action items are like, or some things to consider are, this liquidity won't move over right away. Again, V2 stays open and active, and then V3 is launched in parallel. And so it's not an automatic migration. LPs are going to have a market reason to migrate, and they'll migrate slowly. It feels like Optimism is, maybe going to happen sometime late spring, early summer on the heels of this. So that will be a big upgrade for the community. And the good news is layer 2 is here. I think the other last takeaway is this seems to add some tangible, concrete token economics, cash flow, value streams to Uni, the token. And what are the implications? What are the implications when Coinbase does its IPO and has a publicly traded stock price? What are the implications for Uni, the token there? So a lot to think through. We hope you've enjoyed this Alpha Leak video edition. Once again, Bankless Premium members, you'll get a copy of this Alpha Alert inside of your emails. There's a link so you can subscribe there as well. Anything else, David?
Yeah, maybe just one more comment on the Uni price, just to add some market perspective. It's been trading pretty strongly, I would say, in the last week, and then this announcement dropped, and Uni price went from $34 to $37, and then it's fallen from $37 down to $31, and so there was definitely people who were looking to trade on this news, and so far it's turning out to be kind of a sell the news event. But I don't give a fuck, because this is so, excuse my language, but I think this is really cool. And again, like that Coinbase trade, that's where my head is at. Coinbase is going to drop a bomb on the public stock market, and then people are going to figure out what DeFi is. And Uniswap is just the easiest thing to understand after Coinbase. So that's my market commentary.
There you go, guys. David's market commentary. I hope you've enjoyed this Alpha Alert. Thanks a lot.
Hey, we hope you enjoyed the video. If you did, head over to Bankless HQ right now to develop your crypto investing skills and learn how to free yourself from banks and gain your financial independence. We recommend joining our daily newsletter, podcast, and community as a Bankless Premium subscriber to get the most out of your Bankless experience. You'll get access to our market analysis, our alpha leaks, and exclusive content, and even the Bankless token for airdrops, raffles, and unlocks. If you're interested in crypto, the Bankless community is where you want to be. Click the link in the description to become a Bankless Premium subscriber today. Also, don't forget to subscribe to the channel for in-depth interviews with industry leaders, Ask Me Anythings, and weekly roll-ups where we summarize the week in crypto and other fantastic content. Thanks everyone for watching and being on the journey as we build out the Bankless Nation.